Good morning. Welcome to the Meltdown. Folks, lots going on. And, I always claim that I don't have a crystal ball. I don't prognosticate real well. Well, I'm going to take this back a little bit. I've called this pretty much right on the money. And for those of you that are following the show that listen more than you don't, I'm just going to hop in. Look, the government is using a figure called U3, and this is something that Michael and I will expound on come Monday. Matter of fact, Michael may be ready this afternoon, and if he's of the mindset, I may let him come on and podcast with you guys this afternoon, because he's really got a perception of what's going on. And so as we share fact, I'm going to pull this in so that you understand why we change and do the things we do. Now, the U6 figure is another unemployment factor, and the government is using U3 to a point that it is the numbers that the Department of Labor throws out to make everything sound all rosy as we get back to a place that you can see the economy looking better. And obviously, I'm going to tell you it looks better than what it is, because I've been reiterating over and over and over again that what's going on is a disaster. And that disaster is literally what my concern is for us, the United States, for the world, as we all try to deal with the diversification and why. As quantitative easing and tapering has begun, I've told and said and believe that Yellen is going to use Ben Bernanke as a scapegoat. The economy is not improving. Employment figures really are moused, because when you look at the U6 figure at about 12.7, when you remove the long-term unemployed that are no longer part of that factor, you move up by 2 or 3 percentage points minimum. That puts us up closer to 16%. I've said that I believe real unemployment in the United States is pushing 20 to 25%. That is in line with what's going on in Europe. Europe is in deep trouble again. And so the European Union, the Germans, you see the Germans not working as much. You look at the Greeks, and they're overworking and underpaid. And don't forget, they went months and months and months at a time trying to figure out when they could get paid. And of course, what they're getting paid in, they can't even utilize. It's rampant inflation overseas. And so I don't want to sound like I'm glooming and dooming. I'm really trying to get folks around the simple fact that when you look at the global picture, and you can see that there are metals markets that are getting stronger, they're not losing ground. Things are improving, quote, in the employment picture if you look at U3, but the metals are getting stronger. Okay, now, no, gold has not gone through 13, 14, 1500 yet. These are buying opportunities. And the reiteration of the simple fact that foreign central banks are buying hard assets, gold and silver, is the clear signal why here in the United States, just like in overseas markets, the wealthy, the prudent are looking to turn their currency into something tangible. You stagger a portfolio. Growing up in the 70s and 80s, my dad was in the bond business, and the term striating a portfolio was what was used with the banks. You own short-term, medium-term, and long-term bond positions back 40 years ago. Folks, there's no money in the bond market anymore. That's why the biggest brokerage houses closed their fixed income securities divisions. Now, when you get stock analysts talking about owning gold, then you've got to understand that if they're even remotely right, they don't have a profit center to sell physical metal. They do it in the futures market. And when you go from a 50 to 1 leveraged position, 6 months, 8 months ago when I was talking about how many commitments there were in the futures market to each ounce of gold that was stored in a COMEX warehouse. We went from 50 to 1 to 100 to 1, down to 400,000 physical ounces in the COMEX warehouses of gold, with over 41 million long position ounces to cover. That's 100 to 1. You can't do it. And so I look at the positions that have the ability to be utilized and moved the most. Now, there are Forex traders that are being indicted. There are manipulators, if you will, who look at markets and they go in and they manipulate them. My position is that you take a portion of assets, you reallocate them, and you diversify a little bit more than what you normally have. Now, you may have money in CDs or annuities, and you cannot be happy with a 3-year CD at 0.85%, tying up the money, understanding that if you give it to the bank, they're going to go out and they're going to make 10 or 20 to 1 off of your money. You get a 3-year CD at 0.85%, and they're taking it out and putting it in a mortgage at 3.85%. They're making as much as 10 to 1 on your money, and that's depending on the risk. I'm concerned that we're creating another bubble market, and the bubble market is the one that I'm worried about the worst. I'm worried about what we do and why we do it and how we look at the banking system. It's the banking system that is so frail, so concerned. It's part of the reason why Warren Buffett is such an advocate of banks and not of gold or silver. Governments buy gold and silver. The leverage that's out there is so precarious that all it takes is one more big chink in the armor and we start to see a collapse of the banking system. Now, I look at why we own different types of metals, and we do that because the U.S. government, in enacting the laws to start striking gold, silver, and platinum coins, deemed the coins to be numismatic. That's simple. And for those of you that look at the metals and you say, Brett, I'm not comfortable owning a $100 Carson City silver dollar, let alone a $1,000 coin, I'm going to tell you that this is a thinner market than anything most of you have ever dealt with. And when the herd turns, when people want to buy and they start stepping over each other to get in, you get into a supply and demand scenario that is similar to what we saw a little over 5 years ago. Back in 2008, in the midst of the recession, all of a sudden, investors decided it was time to buy tangible assets. And the backlog of these transactions landed us in a market that took 4 weeks to recover from. In other words, you come in, you buy 100 silver dollars. We had to wait a month to get them. I'm worried about the U.S. Mint being able to keep up with the demand. We are back to allocated deliveries. Now, that's a different scenario. That's where all the vendors come together and they put into the hopper their orders with the U.S. Mint, and the Mint decides who gets what, period. Those are the concerns. And it's from that standpoint that you own multiple types of metals in multiple qualities so that you maintain the status of collectovestor. Now, at the time I came up with the term, Michael kind of looked at me, and I had a couple of other employees because it didn't really make sense on the surface. But once you start to dig in, the government says you must be a collector. If you hoard gold, back in the 1930s, May the 1st, 1933, Roosevelt confiscated gold. He did not go after silver. But in 1985, when Reagan started authorizing the Treasury to make gold and silver coins, and they were deemed to be numismatic, the rules changed. Government has the control. They get to make the rules. You have to follow them or not follow them. I'm going to tell you that you own multiple types of coins because that's what the government's talking about. Now, gold is a government hedge. It's always been called a hedge against inflation. Well, folks, we're deflating by pumping dollars into the system. And you can look at the market today. You can see exactly what's going on. The stock market has been fairly flat, although the Nikkei finally gained for a change, but the dollar's getting hammered. The price of crude oil is back over $98. That means you got comfy with under $3 gasoline, but that's not going to last very long. Weakness in the dollar makes other currencies look stronger. Forex traders, the currency traders, are making money regardless of what you see at the end of the day, because when you talk about moving around billions of dollars, you can make a fraction of a profit, and on those kinds of numbers, the returns are big. Now, one of the stories that I followed a little bit this morning is Bitcoin, and Bitcoin taking its plunge again. Markets trade, period. And because of Bitcoin plunging, major exchanges halt the withdrawal programs. Everyone's watching everything, and it's really close. And so my concern as we move over the next couple of weeks is that we're going to see problems overseas. We're going to see the euro make its changes against the crisis bond plan, how we all pull ourselves out of this. And that's why you own precious metals. I've told people I believe there could be downside in gold, but the upside is still 50 percentage points. Silver's the play. Whether you buy Morgan silver dollars, Peace silver dollars, trade dollars, seeded dollars, regardless of the types of coins you get your hands on, going through another depression recession will force the precious metal cycles to go up. And so if you weigh your portfolio more in the cheapest metal, that's your prerogative. I do it a third, and a third, but I predicate it on your goals and objectives, your age, the other factors that go into calculating why you do what you do, why I do what I do. And ultimately, this is not a get-rich-quick scheme. It never is. And if you want to talk, call me, 281-548-2646. That's 281-548-2646. Hit option 0 and you don't get caught in the phone system. Now you can email me. It's Brett, B-R-E-T-T, at thegoldexchange.net. I love answering email. This will be a weekend where I get to see my son again, and so I may be a little sporadic in responding, but folks, this is what I love to do for a living. Analyzing markets is simple. Understanding where they're going and why they're headed in those directions. You got to remember that Alan Greenspan served as the chairman of the Federal Reserve for 19 years. And after his time on the Hill, when he was running the Fed, he ended up going to Capitol Hill a few years ago. And he was grilled by congressmen and ultimately had to admit that his theories about long-term financial stability and where the markets were headed was wrong. He made a mistake. We paid for it. Ben Bernanke inherited a real problem, and all we did was pump funny money into the system. Now the whole world has accepted the plan and pumped funny money into the system. Now we all have lots of funny money. Certain central banks have taken positions in precious metals. And at the height of the crisis, the Chinese were our best friends, and they took down $3 trillion. That was their debt position in the United States. They've eliminated 50% of that problem, and now they own gold. They are buying up the United States in different ways, everything from companies to real estate. And the reality is that the wealthy get wealthier during a period of quantitative easing, and all of these unemployment figures and all of this chaos works to the benefit of the top 1%. Rick Santorum said it during the last election. The reason why the middle class will be squeezed is the wealthy get wealthier and the poor get poorer. Well, folks, squeezing out the middle class is being done through a number of factors that range from employment to hours to the rate of pay, inflation, taxes, you name it. I know people that are having a hard enough time putting a tank of gas in their car. And when I talk about it, it is with serious concern that whether you've got $1, $100, $100 million, you make these moves to do the things that will protect your portfolio over the long haul. Putting it in a bank is not the best move, period. Putting cash in the bank, not the best move. That's illegal. And if there's a bank run, if the system fails the way we've seen it fail in Egypt, the way we've seen it fail in Cyprus, there will be a bank run in the United States to the point that the banks will shut down, lock the doors, and you can't get in. Those vaults will be sealed. They will spin them, and you can't get in there. I don't care how many of you crash the door. Your bank card will cease to function the way you thought it did. In Cyprus, 13, 14 months ago, the system was so leveraged and had so many problems that people left Cyprus and used their credit cards or their debit cards and swiped them overseas to get euros, to get hard currency. And the banks were monitoring and not releasing any more than the 300 euros overseas that they were releasing daily to you, quote, in the country. But you incurred the expense to leave Cyprus. Folks, this is not made up. This is stuff that we've seen. And now that the whole world has gotten onto the QE system, it's going to collapse. It has to collapse. I just can't tell you when. So whether you own rare coins and you're playing for 5, 10, 20, 30 years from now, or you're buying bullion, remember, bullion is not private when you liquidate it. Yeah, you might find somebody that is willing to horse trade with you, and I'm certainly not alluding to doing anything illegal. What I am doing, and what I emphasize, I almost overemphasize, is that A, you understand that all capital gains and losses are to be reported, period. That's between you, your conscience, and the IRS. My job is to make sure that I'm priced accurately, I give you fair, equitable information, work on a tight spread, and give you sound information. Now, advice, I'm not a financial planner. I'm not looking to manage the entire pie. I'm just telling you that 5 to 20% of your net worth that should be moved around to protect yourself, your family, your financial health, wealth protection, is utilized in precious metals and rare coins. And I've got friends that have got returns of over 18% annually in the rare coins. Whether you're seeking to get 4% money or whether you're seeking to get 18% money. You know what? I remember 20 years ago wanting to stay right where I was. And people were making so much money in certain stocks. Like I said yesterday, one stock went up 42% on the pre-market and another dropped 30% pre-market. That's a huge spread. I am not a financial analyst that can prognosticate the stock market. I want to play with a much smaller piece of the pie. Go talk to your stockbroker and talk to your money manager. For me, if you're tired of that rate of return, quote, in your CDs or your annuities, you're the person I want to talk to. And I want to talk, literally, I want you to come visit me in Humble. The 0.85% number that I came up with on a 3-year CD, the price of platinum is up 0.5% today. I've destroyed the 3-year return. Sure, it's going to correct. Markets go up and down. But this is wealth protection. It's not that you want to get a get-rich-quick scheme. It's that 5 years or 20 years from now, whether it's your estate planning and your legacy or it's your own financial health, I looked up with Michael a red book in 1972. And today, if you were going to buy an uncirculated 1893 San Francisco Morgan silver dollar, you would spend probably $50,000 or more on it. In 1972, you could have bought it for $5,000. Okay? These are coins that are absolutely in demand. And when there's more demand than there is supply, a commodity appreciates, period. So move some money around. Give me a shout. 281-548-2646. Email me, Brett, B-R-E-T-T, at thegoldexchange.net. We're in the Humble area. And Saturdays we're only open if you make an appointment with me. Again, this is a weekend with my son, so I'll be around, but I won't be in the office. It's the time to do things different. I love the commercial that talks about maybe it's time. Of course it's time. It's time to do things different. And if you don't own precious metals or rare coins, physically, tangible, in your hand, then it's time to do that now. Anyway, folks, I'm going to cut the show short. Going to be a short day for me. I appreciate you listening in. I never come off a podcast without talking about Texas Children's Hospital, the Downs Clinic, and the Ronald McDonald House. Now, if you visit themeltdown.com, there are donation banners. Click on them, provide the information, a tithe or an offering, mention the Meltdown, please. But the information you provide is totally anonymous. They do not give it to me. I do not ask. It's not my business. I love the Downs Clinic. My son Jason has mild Downs, and so Dr. Ostermeyer over at the Meyer Center is very special to me. Now, when Jason was in the hospital when he was 6 weeks old, the Ronald McDonald House at Texas Children's took care of us. For the majority of the first 3.5 weeks of our stay, they provided one of the 20 rooms to us, and it's a place after sitting bedside all day. You can go lay down for a few hours or go visit your children in the middle of the night. If you can provide a hot meal, please call 832-824-8600. That's 832-824-8600. Nancy Allen and her staff will help coordinate bringing in a hot meal. There are going to be between 20 and 40 people any given night, and they would love to have something that's more original than what comes packaged. I appreciate their efforts. I appreciate the doctors, the nurses, and the staff. Of course, there are some fabulous volunteers, and I love Texas Children's. I love anyone who helps the kids, whether in our medical center or anywhere else in the world. Now, folks, I appreciate you listening in. If you've got questions, I've given you contact information. Please reach out to me. And folks, please pray for my son and I. Can't wait to see you, Jason. I love you, baby, and I'll see you at 4 o'clock. Folks, have a great weekend. We'll talk to you on Monday. Bye-bye.